We can't allow promising signs of economic recovery to encourage complacency. The administration's plan will build a new foundation for our financial system, rooted in protection for consumers. The financial crisis revealed devastating inadequacies in consumer protection across a wide range of financial products, but nowhere was that clearer than mortgages. To give you but one example, the Wall Street Journal reported in December of 2007 that 61% of those in subprime mortgages could have qualified for prime mortgages, but were pushed into riskier mortgages by lenders and brokers. That's why our plan will create a federal regulator, the sole focus of which is to look out for ordinary Americans. Instead of the patchwork of regulations spread across multiple agencies we saw in the run-up to the crisis that allowed so much bad behavior to go unchecked, the Consumer Financial Protection Agency will have broad authority to protect consumers from unfair and deceptive practices. I believe it will promote fairer, more efficient, and innovative mortgage products for consumers and improve access to financial services in general. The Consumer Financial Protection Agency will have the authority to reform our mortgage laws, and those reforms will be based on 5 fundamental principles. The first is transparency. Every consumer will receive a single, simple, integrated federal mortgage disclosure that is reasonable, clearly written, and concise. Communications with consumers will be required to adequately present risks and benefits of a mortgage product. It also requires the timely collection and publication of data on how loans perform, so the agency can quickly learn what steps to take to protect consumers. Whether we are regulators or consumers, we can only make informed choices if we have all the information. The second principle is simplicity. Simple products that make consumer choices easier. Firms will be required to offer consumers a plain vanilla mortgage product with straightforward terms, such as a 30-year fixed mortgage. The consumer will be free to opt out for other products, but for the first time those will be subject to stringent protections. The third principle we will see in our mortgage markets is fairness, which we will demand. That means requiring mortgage brokers to owe a duty of best execution to avoid conflicts of interest between themselves and the homeowners. They will also be required to determine whether mortgages they sell to borrowers are affordable. Unfair practices such as, brokers will be required to be paid over time based on continued loan performance rather than in a lump sum at closing. We will also restrict or ban prepayment penalties, which we've learned can trap borrowers in bad loans. One of the most important restrictions we will require will be for loan originators and sponsors of securitizations to retain 5% of the credit risk. Bundling and packaging mortgages to sell on Wall Street not only fed the housing boom, it also led to an erosion of lending standards that deepened the housing bust. With this plan, brokers and loan originators will have a vested interest in the performance of the loans they make, rewarding responsibility, not recklessness. No longer will homeowners and investors be the only ones with skin in the game. Fourth, we will require real accountability. That means leveling the playing field so that financial players, banks, non-banks, independent mortgage brokers, all play by the same rules. The days of lenders and brokers shopping for the most lenient regulator will be over. And lastly, the plan will increase access. Access and inclusivity are part of HUD's core mission. And this plan will insist that we strongly enforce the Community Reinvestment Act and fair lending laws, ensuring that underserved consumers and communities have access to financial services, lending, and investment. Obviously, this is just one component of what is a robust, comprehensive reform plan to modernize and protect the integrity of our financial system. But with the failures to properly regulate the mortgage markets devastating to Wall Street and Main Street alike, I'm optimistic about what the President's plan means for HUD, for our housing markets in general, and for the confidence we need to get our economy moving again. And I look forward to working to ensure it is passed into law as soon as possible.